Hi, good evening everyone. Welcome to Quantsapp and welcome back to yet another Wednesday webinar. So today what we will understand is really interesting and it makes options trading really simple. So we will learn about what is volume put call ratio. So wherein we will understand volume put call ratio right from scratch. So even if you don't know what volume put call ratio is, still by the end of the webinar, I would assure you that you will be able to gauge sentiments looking at the volume put call ratio. So do check out the webinar till the very end. And by the way, as this is a live webinar, so you can comment your doubt, queries, question, concerns in the chat box. So wherever you are watching is, just drop us a comment, or if you have any doubts, you can drop it out in the chat box and I'll definitely revert to those. Obviously, keep those doubts, queries, in related to the context that we are going to understand today, which is volume put call ratio. Once again, good evening, everyone. Thank you so much for joining me. So to start off with, talking about volume put call ratio. So why we need something like volume put call ratio? So it is a simple indicator which will tell me whether the bears in the market are winning the game or bulls in the market are winning the game. If I know that bulls in the market are winning the game, for me it is very easy, right? I can take a bullish bet. If I see that bears in the market are winning the game, then it's easy for me again to take a bearish bet. Okay. Now the whole problem lies when we talk about options. So options is a very big data and each and every tick, something or the other activity is happening. That's number one thing. Number two thing, Nifty and Bank Nifty, they are highest traded instruments across the globe, right? Highest options volume happens on Bank Nifty. So for us to manually track who is winning, bears or the bulls, we need to go ahead and compute something which is much more easy to understand, right? Because a lot of numbers might again confuse me. So anyways, what I will do is I'll simple again before I actually explain you anything. My agenda is to simply know who is winning in the market. Are the bulls winning the game or the bears winning the game? Whichever direction, whosoever party is winning the game, I am ready to participate with them. That is the simple agenda what I'm trying to trade when I talk about volume put call ratio. So let's see what does volume put call ratio tell us, and let's make note as we move forward. So I hope my screen is visible and everything is all okay. Yeah. So let's say this. So now talking about options volume. So volume tells you that some activity is happening. Let's say for an instance, there is stock A where the volume is increasing. That will tell you nothing but there is some activity which is happening in the stock. Somebody is buying it, somebody is selling it, right? So we all know this. Volume is equal to activity, buyers and sellers participating. All right. Now, am I able to make sense out of this? That if I see a stock A where the volume is going up, I can make sense that there is activity, there is active participation which is happening at that stock. But am I able to go ahead and guess what the direction is of the stock? Am I able to guess the sentiments of the buyers and sellers who are trading it? No. But options volume helps us in tracking activity plus direction. How? We will learn ahead. So it will help us in tracking that, okay, this is the stock where activity is happening. At the same time, it will also tell us what is the sentiment of the market, what is the sentiment of the option traders who are trading that particular instrument. So it's easy. So when I talk about options volume, I look at it from buyer's perspective. Okay, I'm talking about volume, not the open interest. I'm talking about the volume over here. So let me just make volume a bit bold. Here it is. Okay. So I'm talking about volume. So when I look about options volume, I look at it from buyer's perspective that if I'm looking at put volume, I will see that put buyers are entering. If I'm looking at call volume, I'm seeing that call buyers are entering. Now, why buyers would be the question. It is because when we talk about volume will keep on increasing by every day. Correct? And when we talk about volume, there is no open contract as such which is getting open. In terms of open interest, there is some seller, if the open interest is going up, there is some seller who is taking an undefined risk, who is paying heavy margin, who is actually, coming in the market for a very small amount of premium. But when we talk about volume, the trades out here are getting transacted, right? There is a transaction which is happening. That is the reason I'm looking at it from a buyer's perspective, to keep it very simple. Now it's simple that what I want to know, who are aggressive in the market? So bears. So who are the bears? When we are taking bearish trade, then how can we go ahead and go take a bearish trade? We can buy a put option. Similarly, if I want to take a bullish trade, what I can go? I can go ahead and buy a call option. So it's simple. If I'm a bear, if I am bearish on the market, I will go ahead and buy a put option. If I am bullish on the market, I will go ahead and buy a call option. Another way of looking at this data is that, let's say, me as a trader, I am expecting some kind of a down move to happen in the market. Then I want to hedge my options portfolio, or I want to hedge my portfolio using options. That would be a better way to frame it. But let's say I am a trader, I want to hedge my portfolio using options. What I can do to hedge my portfolio? Simple, I can buy put options. So as on how the market collapses, the put options which I have bought, they will yield me returns. That is the first way of doing it. The second way of looking at it is would be, let's say I'm expecting that the market might go up. So what I'll do, I'll buy a lot of call options in expectations that the market might move up from here. So there are two ways of looking at it. Let's say fresh put buyers, okay, or else put traders buying puts as hedges. Okay, whichever way you look at it, as long as there are more put volume which is happening in the market, it will tell you that there is more activity happening on the put side. So let's say call. So it would be fresh call buyers. So it doesn't require me to tell you that, why will someone buy a fresh call? Again, using call to benefit from the potential up move. Okay. So it doesn't really matter if it is a fresh buyer or someone who is going ahead and just using options to hedge it. It won't really matter as long as I know that if there is more put volume, or let me put it this way, let's say bears and bulls. If I know that put volume, okay, is increasing, it will tell me that bears are aggressive. If I come to know that there are more call buyers, that means more call volume is increasing, that will tell me that the bulls are aggressive. Okay. So what we conclude from this is, we conclude a very simple thing, that if I get to see that volume on the put side, if it is increasing, that means more activity, more trading is happening on the put side, right? So that will tell me that bears are aggressive. Similarly, if I'm getting to see that more calls are getting traded, more activity is happening on the call side, that will tell me bulls are aggressive. Now it becomes much more simpler for me to actually go ahead and just look at these two data points, which is the put volume increasing or is the call volume increasing, and then gauge the sentiment of the market. Simple, if the put volume is increasing, bears are aggressive, giving me a bearish sentiment. All right. Similarly, if call traders are more aggressive, that means the bulls are more aggressive, that will give me a bullish sentiment. That is the conclusion so far. It's very simple. It's very easy. Again, why from buyer's perspective? It's because that there is a transaction which is happening over here. There is no fresh open contract which is getting created when we talk about volume, right? Necessarily, it does not mean that a fresh seller is coming in and taking a negative reward to this trade. That is the reason I'm looking at it from an buyer's perspective, that more activity happens on either of the side. That means the participants are more confident the market to tilt in that direction. So that's that. Now, the problem out here would be that the solution is simple, correct? But yet it is very tedious activity to go ahead and do day in and day out. That I know what I need to achieve. I simply need to see if put volume is more or the call volume is more. But still, it is very tedious activity for us to go ahead and do. Let me explain you why and how. So I am in the application. You can navigate to the application from link in the description box below. It would be also there in the iCard. If you don't have the app, there would be link to download the application as well. Do download the application. We have real-time tools in the application which update tick by tick, second by second. Apart from that, there are over 25 tools which are absolutely free for everybody who has signed up with the application. Something like option chain, we are keeping it very simple when we talk about option chain, and yet it is very easy and very handy to have if we actually are trading options. It doesn't matter even if you are getting started. I believe this screen is essential, right? You can't trade beyond without this screen. So anyways, now what I need to do is simple. I just need to go ahead and calculate the put volume, right? I will go ahead and calculate the put volume, and I will calculate the call volume. Okay. Now, will I do it for a single strike? No, I won't do it for a single strike, because doing it for a single strike might not make a lot of sense, because there is activity happening on all the other strikes as well. So what I need to do, I need to actually go ahead and do sum of all these option prices or option volume. I need to plus this, plus this, plus this, plus this. I need to keep on doing this. Similarly, I need to actually add all of these volumes out here, and then eventually I will get a figure. But now the problem is, can I do it in the market hours? Can I go ahead and keep on saying kitty ke iska itna, iska itna, iska itna? It will take me ages to actually go ahead and gauge the sentiment. So that is the reason we have something known as volume put call ratio. Okay. So now what is volume put call ratio? It is total put volume divided by total call volume, right? So let me just text it. Here it is. So this is the formula. Now, what I want to achieve over here is, so what this formula will actually do for me, it will do the sum of all the volume on the put side, and it will divide it with the total sum of the all the volume on the call side, and it will eventually give me a single figure. So let me explain how. So let's say the volume that I got on put side was, let's say, 1.9 CR. Okay, a random figure, 1.9 CR. So this is trying to tell me that there are so much number of bearish activity which is happening on the market on the put side. Now I will divide it with whatever I got the answer on the call side. Let's say I got total call volume as 1.2 CR. So this would be my volume put call ratio, which is 1.5883 something something. Okay. Now let me just convert it into very smaller decimals. 1.58. This would be my volume put call ratio. Now let's say if I got total volume on the put side to be 2 crores. Okay, 2 crores. So I will get my volume put call ratio as 1.67. Now this is getting simpler for me. How it is getting simpler? Now let's say if I see volume put call ratio going down, that means what is happening? There are more bullish trades which are happening in the market. If I see volume put call ratio increasing, that means more bearish trades are happening in the market. So let me just show you. So let's say volume PCR up. Okay. So how will it go up? Let's say 1.7 divided by 1.2. So see, this is the figure. 1.41. 1.7 on the call side, 1.7 on the put side, 1.2 on the call side, the volume. Now let's say 1.9 divided by 1.2. So volume put call ratio went up. Why did it went up? It went up because if you see the volume on the put side, it has increased from 1.7, it has went to 1.9. Let's say it is 2.2 divided by 1.2. So it is 1.83 versus 1.58. So the idea is that the volume put call ratio will go up in two scenarios. Scenario number one is when put buyers or put volume increases. Okay, when put volume increases, the volume put call ratio will go up. That is case number one. Case number two would be, let's say this remains constant at 1.7, but this goes to 1.2. Okay, this goes to 1.7 divided by 1.5. See, it went to 1.1. Okay, or let me just tweak it a bit. So let's say this 1. Okay, 1.7 is equal to 1.7 divided by, let's say, 0.7. Okay, say 1.7 divided by 0.5. Okay, so now what I am trying to show over here is that volume put call ratio could go up in two scenarios. When put volume increases, simple, when the numerator increases, the volume put call ratio might go up. Case number two is call volume decreases. Okay, so either of these cases will lead to jump in volume put call ratio, but in both the cases, my sentiment would be bearish on the market. Why my sentiments would be bearish on the market? Because in this case, the put volume is increasing, and in this case, the call volume is decreasing. That means call traders are not very aggressive. They are hesitant to actually go ahead and take bullish trades. Opposite would be on the downside. Volume PCR down. Okay, when it will go down? It will go down when put volume decreases. That would be the first case. Second case would be, or either of them or both of them going parallel. Let's say case 2, it would be call volume increasing. But in both the cases, my sentiment on the market would be bullish. Why? Because if the put activity is decreasing, that will tell me less put traders are using put options to take bearish trades. Number one. Number two would be, if call volume is increasing, that means more bullish traders are aggressive in the market. They are making bullish bets. Okay. So the conclusion is volume PCR, if it is going up, I will have a bearish sentiment. If the volume PCR is going down, I will have a bullish sentiment. The reason is simple, because of both of these rationales. Okay. So now I think most of the things are clear. Still, in case if anybody has any doubt, please drop it out in the chat box. I'll just quickly run through the chats. So today we will be doing the webinar in English. The next time we will do it in Hindi, because it was a request that try to keep the language one, either keep it in English or either keep it in Hindi. Don't try to mix the languages. So that's the reason we will do it in English today. The next time we will do it in Hindi. And we have uploaded the video of that one also. The put call ratio, volume put call ratio. We have uploaded a video in Hindi. Good evening, sir. Hi. Hi, Yashi. Hi, Jayashi. Good evening, sir. Good evening. Hi, good evening. Good evening, everyone. I just saw your chat. How to know volume, put volume or call volume on charts. So see, the point is that I don't want to know whether if it is put volume or call volume. So let me just show you. As long as I know that volume put call ratio is going up, that means either of these two activities or both of them together is happening. Okay. Now, if this is happening, I know that my sentiment is bearish. If volume put call ratio is going down, then there could be just two possible scenarios. Put volume is decreasing or call volume is increasing. But in all of these cases, my sentiment on the market would be bullish. Okay. So that's that. So let me just tell you. So this is the conclusion. Now your question would be, where can I get volume put call ratio, right? Because it will directly tell me that what is my sentiment? Is my sentiment bearish or is my sentiment bullish? It will clearly tell me कि market में who is more aggressive. The bearish traders are more aggressive or the bullish traders are more aggressive. And that will give me a clean edge in the market when I'm trading in options. So all you need to do is just come to this thing. Just share my screen. Yeah. So this is what I was sharing, which is volume put call ratio. If it is going up, that will only go up if the put volume is increasing and call volume is decreasing, or both of the activities happening together. Similarly, volume PCR will go down when put volume is decreasing and call volume is increasing, or both of the activities happening parallelly at the same time. But at the end, my sentiment is simple. This is the thing of what I needed to achieve. Volume PCR up, more bearish traders giving me bearish sentiments. Volume PCR down, more bullish traders giving me bullish sentiment. That is the only thing I wanted to know. Now the scenario is where I can get volume put call ratio. So all you need to do is just navigate to the application. Again, the link would be there in the description box below, and just search for PCR. So the moment you search PCR, 3 times historical and volume put call ratio historical. So I'm taking you first in volume PCR. So volume PCR over here, it will show you previous, what was the yesterday's volume put call ratio, current, what is right now, whenever you are looking at the data, what is the volume put call ratio, change in volume put call ratio, how much in terms of percentage compared to yesterday, volume put call ratio has changed. So it's basically current versus previous. It's trying to show us whether the volume put call ratio has increased or it has decreased. Now, the important fact is the historical data. So if I just tap on this volume PCRH, this is where things starts getting interesting, wherein the blue line is showing us volume put call ratio and the orange line is showing us the futures price of the selected instrument. We can select our favorite instrument from the search panel over here. Now, if you just observe this chart, which is just observe the blue line for a while, do you see any major trend which is happening in the blue line? No, I can't see it. Why? Because if I just see that whenever it makes a top, it collapses, right? But I don't know that it will collapse exactly from a particular point, but more or less what I can see is that whenever it goes at top, it collapses. And whenever it is at the bottom, it kind of spikes up. So this characteristics is called as mean reverting characteristics. It will mean revert to its normal behavior. In simple words, it will not trend. So if you see sale, so yeah, this is sale. If you see, the stock has been trending on the upward side, right? Obviously, it had some halts, it had some pauses, but it is trending in a particular direction. But do you see the volume put call ratio line trending in either downward side or upward side? No. If it is going at the bottom, again it spikes up. If it is at the top, it again collapses. So now this mean reverting characteristics make things very simpler for me to go ahead and take a trade. Why? Because something what is mean reverting now, that is much more easier for me to predict if I'm trading. So what I mean is, so let's say this and this. Okay, so let's say more or less, okay, if not exactly like this, but more or less, if this is how the volume put call ratio is moving. So if I'm placed on this data or where in somewhere in this vicinity, I will know that the volume put call ratio might drop. If I'm placed in this vicinity, in this area or in this zone, I will know that volume put call ratio may spike up. Will it happen always? Maybe not. Sometimes it might go against your view as well, but we can't be sure 100% of the times. But these are the general characteristics what will happen. So whenever the volume put call ratio reaches in this zone, you know that the volume put call ratio will show the mean reverting characteristics, and from top it will come down. And whenever it is at the bottom in this zone, in this vicinity, you know that the volume put call ratio might spike up, right? So for that purpose, we will go ahead and trade this mean reverting characteristics of volume put call ratio. Okay. So it is mean reverting, that thing we already understood. Now we know that if it is mean reverting, it is much more simpler for me to actually go ahead and anticipate the movement of the volume put call ratio. Because if it goes at top, I will expect that the volume put call ratio might go down. If the volume put call ratio goes at bottom, I might expect that the volume put call ratio might go up. Okay. So that's that. YPCR is just opposite of volume put call ratio. Yes, right. You can say it in that way. Session is good. Thanks. I'm interested to know intraday trading. Maybe you. Sure. Mr. Vishwanath, sure. You can post your queries towards the end. Please compare both in brief. So OIPCR. So somebody just asked me a comparison between OIPCR and volume put call ratio. Open interest, it may remain unchanged as well. End of the day basis, because it actually shows how much open contracts are there out there in the market. Okay, but volume, it always keeps on changing, it always keeps on increasing because more and more number of trades are happening in the market. First thing. Second thing, open interest put call ratio is much of a positional indicator, a medium term indicator. But whereas volume put call ratio, it is more of a short term trading indicator, because if you see, the spikes are reaching the extremes very fast. Why? Because a lot of volume is happening on the options front of this particular instrument. But at the same time, if you would have seen the open interest put call ratio graph, you will see that it takes some while to reach a bottom or the top. So that those are the differences. One is the open interest put call ratio is more medium term indicator, medium term analytic, whereas volume put call ratio is more of a short term trading analytic. So anyways, now what my trade is, I hope I have answered most of the queries. What my trade is very simple over here, that when I know, let me just undo this. So when I know that volume put call ratio is in this zone, that means what has happened? A lot of put activity. So I'm writing PA for put activity. Okay. A lot of put activity has happened over here. That means a lot of bearish trades. So I'm writing BE for bearish. A lot of bearish trades are actually getting placed over here. At some point, they will have to stop, and the underlying will show that changes, right? So what I mean is, from this point to this point, if the volume put call ratio has went up, that means a lot of put buyers would have traded, a lot of put hedges would have been happening in those particular instruments. Now whenever this happens, what will someone expect? If I am seeing this, I will expect that the underlying might go down from here. Underlying might go down from here. Why the underlying might go down from here? Because the answer is simple. From this point to this point, so much put activity is happening, so much put buying is happening, that they are expecting some kind of a fall to happen in the instrument. So that makes it very, very simple, and that makes it very, very interesting. So the simple trade for me in this zone is that whenever volume put call ratio reaches the upper extreme, I will go ahead and create a bearish trade. Okay, so ignore me for my handwriting. Similarly, if volume put call ratio is, if it reaches the bottom, okay, if it reaches the bottom, then I will be interested for a bullish trade over here. Okay. So why bullish trade again? So just imagine that so much call buying is happening. The activity on the call side is so very high. Why it is high? Because they're expecting some kind of an up move to happen. Now we don't need to actually worry, because Quantsapp volume put call ratio historical, it makes it even more simple for us. Because one more problem with this mean reverting characteristics is that if I want to go ahead and find a top of sale in this scenario, that top was made on 25th of May 2023, and the volume put call ratio was 0.75. So for me, according to volume put call ratio, to take a bearish trade on sale, I actually need to wait till here. Why? Because it has mean reverting characteristics. So obviously I will have to wait for sales volume put call ratio to go somewhere around 0.75. Only then I will be able to see that, okay, volume put call ratio sale ka, it is in the upper regime. It is around the top. So I should be ready for a bearish trade. But that is not the case because it has mean reversion. It will show us mean reversion on a major scale, on a bigger scale. But even if you zoom in the scale, even if you look at it on a smaller horizon, still you will see that it is showing mean reverting characteristics. So the major tops and bottoms will be there 100%. But even on a smaller horizon, there would be some tops and bottoms. You will see the volume put call ratio is respecting and it is showing mean reverting characteristics on a smaller horizon as well. So what I mean is that there would be some big tops and bottoms. That is all right, that I can identify looking at the chart. But even if you see, there are some smaller tops and bottoms as well, which I need to monetize. How that can be done? So that is actually taken care of. So the smoothing is something what Quantsapp volume put call ratio historical takes care of. And over here, for me, it is simple that if you observe that at every bottom, right, every recent bottom, there is a green triangle which is getting formed on the graph. It is trying to tell us that there might be a bullish possibility which has been identified by volume put call ratio historical for me. Okay. Similarly, at some tops, you would see that there is a red triangle which is getting generated. So the red triangle is trying to tell me that for me, there might be a bearish opportunity. What has been created based on volume put call ratio historical data's movement. So now it's simple that it is identifying tops and bottoms as well. It is identifying it by triangles as well. So I don't need to go ahead and give any manual input. I only need to open volume put call ratio historical and just observe if there is a green or a red triangle. So even if you don't want to understand what is volume put call ratio, anything, just open volume put call ratio historical and just see if there is a red triangle, that is indicating that the volume put call ratio is around its upper regime. That might be a bearish opportunity generated over here. Similarly, if you see that there is a green triangle which is getting generated, that is trying to tell us that, okay, there might be a bottom of volume put call ratio which has been formed. From here, the underlying might show a bullish sign. So that is how simple it would get. So only thing we need to do is we just need to practice it for some time and the things will keep on getting better. Will it work 100% of the time? No, none of the indicators I would say will work 100% of the time, but I have tried it. It works excellent, right? So we can all easily use volume put call ratio just by coming in volume put call ratio historical. So any doubt, queries, question, concerns, so you can post it out in the chat box. I would like to summarize it quickly. So to summarize, it's very simple that what we understood. So we understood that I want to track options volume. Why? Because it will track activity plus direction. I will look at it from bias perspective because there is no open contract which is getting created and so on and so forth. So bearish traders will buy put options. They will use put options to hedge. Bullish traders will buy call options. They will use call options to actually anticipate or to benefit from the upcoming move. Okay. So if put volume is increasing, I will say that the bears are aggressive. My sentiment would be bearish. If call volume is increasing, I would say that my sentiments are bullish. So we understood that doing this manually day in, day out might be a tedious activity. It is an impossible activity. So for that, we have a simple analytic named as volume put call ratio. So it's basically measuring who is winning the game. How it is calculated? Total put volume divided by total call volume. So it's simple. Volume put call ratio up will give me bearish sentiments. Volume put call ratio down will give me bullish sentiments. And then we saw that volume PCR is mean reverting, which makes it actually very easier to predict. So for me, it's very simple. Vol PCR at top is actually a bearish opportunity, and vol PCR at bottom or around bottom also, not exactly at the bottom, but around bottom is bullish opportunity for me. And that even gets simplified, that even gets sharpened with the help of volume put call ratio historical in Quantsapp by help of green and red triangle. So if you see on sale, so I actually got this move today, but if you see sale on 10th of August, there was a bearish opportunity which was been identified by Quantsapp volume put call ratio. You can see the red triangle over here. When sales price was 93, it gave an exit today when the price has dropped to 85.3, which is roughly 7 to or 6 to 8% of fall which has happened since anticipated. So a good fall, right? And it works on Nifty, Bank Nifty, and mostly liquid stock, it works well. Okay, but will it work 100% of the time? No. So will that triangle prints at the morning for sale? Yes. So it will happen, right? Whenever the opportunity is identified, the triangle will be shown over there at that point. So something like this. So today, if you see, a green triangle has been formed in sale. So similarly, whatever the signal is, the triangle will be formed, and the sequence would be that there would be green, there would be red, there would be green, there would be red, right? Green ke baad red, so it will never be green, green back to back. Okay, so first entry, then exit, first entry, then exit. So if I'm taking a bearish trade, it would be entry, exit. Okay, entry, exit, entry, exit. Similarly, if I'm taking bullish trade, this would be entry, this green, this red would be exit, entry, exit. So this is how it will work. So you can't take two trades back to back using this model. Matlab, what I mean is, if you want to go ahead and take a bullish trade, you can't take that bullish trade two times back to back. Okay, because the model will give us exit. The bullish trade will be exited after some point, and then after that sell trade is exited, then there will be a bullish trade which is getting formed. Can we use it for intraday? Yes, we can use it for intraday, but generally the way I use it is I look at volume put call ratio historical end of the day, identify few stocks. Okay, so let's say something like sale or whatever stock comes on our radar list. So let's say if I'm doing this scan on 10th of August, so I will keep sale on my radar list. Then I maybe can sharpen my trade using charts, right? I can use some technical analytics, and then I can sharpen my entries and exits. So I will have a clear plan for tomorrow that, okay, this is the stock. I need to create a bearish trade only after a particular level has been triggered. So you can sharpen your trades looking at some other analytics as well, even that is okay. So, sorry. So yeah. So now, any doubt, queries, question, concerns, please push me out in the chat box. And that's it from my side. It's very easy for us. But in case if you have any doubt, queries, you can just push me out in the chat box. Uh, so let me just see. Our volume is not decreasing. So this is the exact question that was been asked to me time and again. Volume is not decreasing over here. See, the put call ratio, the volume put call ratio, it is going down. Okay, the volume is not decreasing. So what I mean is, so let's say, let me just show. So let's say vol PCR. Okay, so we are tracking vol PCR. First of all, remember that. So I got this question. I would know, I saw it coming. Let's say the volume put call ratio, the volume was 1.9 divided by, let's say, 1.5. This is volume put call ratio. Now, obviously, everybody will say that the volume will keep on increasing if it is cumulative volume. Agreed? Let's say if this happens to be 19, divided by 15. See, now still the answer is same. Over here, the volume is 1.9 crore divided by 1.5 crore. Over here, the volume is 19 crore divided by 15 crore, right? Now, let's imagine that if the volume is 30 crore divided by, let's say 27 crore. Now the volume put call ratio went down, right? It is not the volume that we are tracking, right? We are tracking the volume put call ratio, and that mean reverting characteristics is what we are talking about. So I hope that answers the question. So I hope I shared my screen. Oh, my bad. So see, here it is. So in this case, 1.9 divided by 1.5. So this is the volume put call ratio, 1.2. Over here, 19 crore divided by 15 crore, 1.26. Over here, 30 crore divided by 27 crore. So that actually gives me this 1.11. So over here, the volume put call ratio has went down, but the volume has went up. It has went up from 19 to 20 to 30, right? From 19 and 15, it has went up to 30 and 27, and that is how the volume put call ratio is dropping. So I hope I answered that query. Okay. So Ravi ji, we are looking at put volume, not put open interest. Can we do positional trades? Yes, but generally short-term trades is what we are looking at. So as I said, Mr. Jay Kumar, the volume is not decreasing. We are talking about the. So yeah, you are talking about put writers in. This is pure volume exactly. Is the volume PCR updated during live market hours? Yes. Can you merge this with IV? Not needed actually. So we are talking about volume put call ratio, Raviji. It is not open interest put call ratio. I showed example of the example is right on the screen. So as of now, there are no alerts as such. We need to do it manually. IV सोबत merge करके कुछ फायदा होगा नहीं. There is no point as such merging it with IV because this is purely a directional trading system and I'm not trying to complicate things. Okay. And talking about if it can be used for Nifty, yes, it can be used for Nifty, Bank Nifty. One another trade I caught was Ambuja Cement. Okay, so just check this out. So 7th of August is where there was entry which was spotted, as you can see, 477, and it spotted an exit on 459. So again, a good down move which was been captured. So anyways, that was it from my side. Do check out volume put call ratio historical. As I only said that will it work 100% of the time? Maybe not, right? You can obviously try to sharpen these things with charts or the built up or some other analytic to kind of gain more and more confidence. Talking about me, volume put call ratio standalone would give me enough conviction because over here I'm trading a directional trade. My reward to risk is going to be in my favor. So even if I get a reward to risk of 2:1, I don't mind taking a strike rate of 60-70%, right? So do check out volume put call ratio historical. The link would be there in the description box below. In case of any doubt, queries, question, concerns, you can write us on support@quantsapp.com. Happy trading.